Good morning. Good morning to all the third BCom computers and general students. Subject is banking theory and practice. Okay, we are in unit 3 revision. Already I explained 2 units answers for the revision for the final examinations, which are very important, which are going to be asked in the examinations. Now we are discussing about third unit important answers. In the third unit, one of the selected and compulsory answer, mandatory answer for the final examination is Reserve Bank of India. It is compulsory answer for you for the final examination. So I request all the students to listen this class properly. Already I explained you about Reserve Bank of India, but once again this is a revision class only. I request to listen, note down and concentrate and learn the answer. Good morning students. Once again, the answer is about RBI, Reserve Bank of India. The Reserve Bank of India is India's central bank. It is also known as Bankers Bank. The RBI controls monetary and other banking policies of India. The Reserve Bank of India was established on 1st April 1935 in accordance with the Reserve Bank of India Act 1934. The Reserve Bank is permanently situated in Mumbai since 1937. The Reserve Bank of India is central government bank, apex bank, bankers bank. Okay, it is monetary authority of India. It is the total toppest bank started on 1st April 1935 accordance with the RBI Act of 1934. The Reserve Bank is permanently situated in Mumbai since 1937. Okay. The management and the capital, if you talk, the initial capital was 100 crores, which has been bought by Government of India. In this 100 crores, 2.2 lakh subscribers from the central government. Okay. Organizational structure and the management of RBI, if you see, the management of Reserve Bank of India is vested with Central Board of Directors. There are 20 members. The Board of Directors, one is the Governor. First person is Governor. 4 Deputy Governors appointed by Central Government. One is Governor. 4 Deputy Governors appointed by Central Government. 4 Directors nominated by Central Government. 1 from each local board. 10 directors nominated again by the central government, 1 government official nominated by the central government. I repeat, 1 governor, 4 deputy governors, 4 directors from central government, from 4 local boards, that is north, east, west and south, 10 directors appointed by the central government, 1 government official again is selected by the central government. So this office is going to work with this board of directors. It is going to work for 5 years. Every 5 years there will be a changes in this department or people working committee. Clear? The Reserve Bank is fully owned and operated by the Government of India. The preamble of the Reserve Bank of India describes the functions of Reserve Bank as regulating the issue of banknotes. First point. What is the first point? Printing or number of currency notes. Currency should be printed is the responsibility of RBI. Issue of banknotes. Securing monetary stability in India. Securing means it is giving the security that there should be a financial stability in India. Modernizing the monetary policy framework to meet the economic challenges. What the new economic changes, how to upgrade these changes, how to overcome and move front. These all policies it is made. Directors, I repeat once again, the Reserve Bank of India operations are governed by Central Board of Directors. RBI as a whole is appointed with 21 members. In this, one is Governor, 4 are Deputy Governors, 4 Deputy Governors, 4 Directors Central Government from North, East, West and South, 10 Directors and 1 Government official again by Central Government. The Central Board of Directors comprises of officials, directors, the governors which are appointed Non-official are 10. It is explained already. Next, organizational structure of RBI. If you see, Central Board of Directors, Deputy Governors, Executive Directors, Principal, Chief General Manager, Deputy, Assistant Managers, Support Staff, etc. This is the organizational structure. Objectives. The primary objectives are RBI are to supervise and undertake initiatives for the financial sector consisting of commercial banks, financial institutions and non-banking financial companies. Some key initiatives are reconstructing bank inspections, fortifying the role of statutory auditors in the banking system. Major functions. Monetary authority. It is monetary authority. Monetary head is RBI. Formulating and implementing national monetary policy. Formulating, preparing and seeing that should be implemented. The national monetary policy. Maintaining price stability across all sectors while also keeping the objective of the growth. Regulatory and supervisory functions are also there. First one is the monetary authority. Under the monetary authority we have two: formulating and implementing the national monetary policy, maintaining price stability across all sectors while also keeping the objective of the growth, set parameters for banks and financial operations within which banking and financial system functions, project investors' interest and provide economic and cost-effective banking to the public. Foreign Exchange Management oversees the Foreign Exchange Management Act 1999, facilitate external trade and development of foreign exchange market in India. Foreign Exchange Market oversees the Foreign Exchange Management Act 1991, facilitate external trade and development of foreign exchange market in India. Currency issuer issues, exchanges or destroys currency and not fit for circulation. It is a responsibility to RBI is having the right to destroy the currency notes also, exchange and issue the currency notes which are not fit in circulation. It is going to destroy. Provide the public adequacy with currency notes and coins and in a good quality. Development role. Promotes and performs promotional functions to support national banking and financial objectives. Related functions. Provides banking solutions to central and the state governments and all acts as their banker. Chief bank to all the banks, maintaining banking accounts of all scheduled banks. Policies of RBI. Repo rate. Repo or repurchase rate is a benchmark interest rate at which RBI lends money to all other banks for a short term. When the repo rate increases, borrowing from RBI becomes more expensive and hence customers are the public bearer and outcome of high interest rate. Repo rate. Repo or repurchase rate. The benchmark interest rate at which RBI lends money to all the other banks for short term. Means a bond is prepared by RBI and this bond is sold to all the banks and this bond consists of certain value of money, where the banks which are in need of liquid cash or liquidity, they may purchase this bonds from RBI. Okay, this is for a short term only. It may be up to 18 months, 18 months only. Okay, and sometimes if RBI is in need, again it will repurchase from these banks. Reverse repo rate. Reverse repo rate is a short term borrowing rate at which RBI borrows money from other banks. Till now what happened in the repo rate? RBI sold the bonds. Now RBI is purchasing the bonds which are sold by it from the other banks. You are able to understand? The Reserve Bank of India issues this method to reduce inflation when there is excess money in the banking system. When all the banks are having full finance, it is going to buy this back. Cash reserve ratio is very, very, very important. All the banks, there is a rule that they should maintain minimum CRR, cash reserve ratio. Cash reserve ratio means out of 100%, at least 20 to 25% of the money should be kept with RBI in the form of security. This security may be time deposits, term deposits, okay, or any type of assets and securities. This percentage of the amount a bank is lending to RBI for security. Why? In any cases of winding up losses, the RBI is going to give the support and return this money to the bank. CRR is a particular share of any bank's total deposit that is mandatory and to be maintained with the Reserve Bank of India in the form of liquid cash. It is compulsory that every bank should give its deposit to RBI. That is called as cash reserve ratio. Statutory liquidity ratio. Okay, leaving aside, you are keeping aside cash reserve ratio. Banks are required to maintain liquid assets in the form of gold and approved securities. A higher SLR disables the banks to grant more loans. Not only cash. Okay, sometimes deposit may be in the form of gold, jewelry, assets, etc. Also they can take the loans. Okay, that gold also should be given as a deposit to the RBI. Okay, that comes under statutory liquidity ratio. Along with cash reserve ratio plus gold also or assets also you are giving as a securities to RBI. Means this comes under statutory liquidity ratio. A higher SLR disables the banks to grant more loans. If high SLR is there, loans will be more from RBI. Monetary role of RBI in modern economy. Traditionally, RBI functions has been as follows: regulates the issue of banknotes and coins, keeping reserves, ensuring monetary stability, operating currency and credit system. Keeping reserves, ensuring monetary stability, protecting the systematic stability of finance, operating currency and credit system. Okay, regulating the banknotes are main functions of RBI. And the other functions of the RBI, monetary authority. The main function of RBI is formulating, implementing the monetary policies of India, creating and balancing between price stability and future economic growth is the main challenge of RBI as a monetary authority. Regulatory and supervisory of financial system. RBI sets the rules and regulations under which Indian banks and financial systems must operate. The idea is to turn the banks and the financial system so efficiently that public should trust the system and they should feel confident about the financial system. It wins from RBI. RBI ensures public confidence by giving the depository money in safe. The banks and all the banks and financial functions are operating seamlessly as per rules. Manager of foreign currency. In India, all the foreign currency flow must be done as per Foreign Exchange Management Act. Okay, all the policies should be followed according to Foreign Exchange. FEM means what? FEMA means what? Foreign Exchange Management Act. In the RBI, who ensures the transactions happens as per FEM. The bigger role of the RBI is ensuring that external trade happens in a seamless manner. Whether the trader is resident in India or foreign national, they must be able to deal in foreign exchange in an easy and transparent manner. Banker to the government. Like retail and commercial banks gives services to common public, RBI is a retail bank for Government of India. It is giving very less rates of interest, charging less rate of interest which are taken debts by Government of India. RBI also acts as a merchant banker for Government of India. Issue of currency. It is a responsibility of the RBI to print and issue new currency notes in India. It is also the RBI's responsibility to exchange old or damaged notes for new ones. This way, RBI can manage the availability of enough good quality cash. needed in the market at a given point in time. Hence, cash means both notes and coins. Regulatory system and supervisory of payment and settlement systems in India. All the payments must be settled as per the Payments and Settlement System Act 2007. Next, in India there are several payment systems like ECS, credit card, debit card, RTGI, IMPS, UPI. All these payment systems are covered by PSS Act. The overall objective of RBI is to provide fast, safe and efficient payment system for the public. Efficient payment flow is one of the main confidence booster of the public in India financial system. Bankers Bank. All the banks in India maintains an account with RBI. They keep their statutory reserves and other deposits in their account. Hence, this way RBI also functions as a bankers bank. It is RBI's responsibility to ensure interbank transactions. RBI can also lend money to banks as per special case. Thank you, students. Thank you very much. It is one of the important long answer for your final examination. I request all the students to learn this answer and prepare for the exams. Thank you.